Have you been wanting to invest in real estate without the day-to-day hassles of being a landlord? If that's a yes, then this video is for you. Today, I'm here to show you how to find passive real estate investment opportunities so that you can kick up your feet and relax. You're probably familiar with a lot of benefits of investing in real estate, such as cash flow, appreciation, tax savings, but you're probably also aware that actively investing in real estate is quite a lot of work. As real estate continues to grow in popularity as an investment vehicle, the opportunity to passively invest has grown tremendously, meaning that you can invest in real estate without having to do the dirty work. Now, there are a few different ways to do this, and by the end of this video, you'll have all the information you need to start putting your money to work. First, let's start talking about REITs. Real estate investment trusts, now otherwise known as a REIT. Now you have two different types oftentimes. You have publicly traded, which most people are familiar with, and then also private market REITs. The majority of what people have exposure or experience to is publicly traded. And what that means is it's available through a stock exchange or a stock brokerage firm. It does invest throughout a broad diversification of real estate. A lot of times they're categorized into either office class or multifamily, commercial, sometimes more of a diversified approach as well. And then they generate income or dividend distribution, oftentimes having a set distribution schedule based on the underlying assets. Now you benefit in that because you can get diversification. The downside, because it's more of a publicly traded element, it is more subject to market fluctuations in terms of value. The other thing that I would say is a bit of a downside related to it, though, is you're dealing with the anonymity of Wall Street, right? You don't know who's specifically running it, how are they choosing the assets. It really is more of a kind of Wall Street type product. So again, there's good and bad to that. The diversification probably leans into the good. The bad is that you're going to have fluctuation in values as well as the unknown factor of exactly what, when, and where they're investing. Next, we're talking about crowdfunding platforms. Now, in the last probably 5 years, crowdfunding platforms have really come into more of a mainstream element. So what that does is it allows for people to join into this, typical website funding arena. There's a multitude of opportunities or options that are typically available. A lot of times they have a smaller dollar increment. Some of them as low as $5,000, others at $25,000 or $100,000. And so it does open up the door to maybe non-accredited investors or less sophisticated investors. The downside there is you have an unknown factor, right? Who are the people behind the selection of the investment? Now, again, they have a bio pasted up there or something along those lines, but you really don't have much in the way of a connection or interaction with them other than through the crowdfunding platform. And so it is something with which it has proliferated because more people can access it at lower dollar amounts, but also at the same time, there is those concerns as to the quality of the investments that are there, the quality of the operators that are there, and really it's a more difficult due diligence mixed bag for you, the investor, because you're not directly accessing the investors. If you're enjoying this video, make sure give it a like, subscribe to my channel, and comment down below what you'd like to learn next. Next, we have turnkey rental properties. Now, most people are familiar with buying a home and renting it out. The turnkey rental market has really kind of exploded, if you will, in the last 20 years. And what that is that there is a person or company that they acquire, fix, and then sell you a rental property and then tenant the property and then typically manage it for you. So that's where the term turnkey comes into play, so that you are investing in purchasing, that you actually own the house directly or the townhome or condo, whatever that may be. You own it directly. You've either paid cash for it or taken out a mortgage, and then they're managing it. Now, so with that, there's some good and bad. Again, with that, it's you have the ability to use leverage because you're taking out a mortgage and you're using the bank to leverage that. The downside of that is that there's a lot of energy that goes into typically the vetting of the mortgage process. The other piece of that component is that you're not as certain as it relates to the valuation of the property oftentimes, because you're typically buying in a market that's outside of the area that you're directly in. And then so that valuation is more determined by the operator. And again, nothing against them, but there is also a profit margin that's bought or obtained within the sales price. And then now they're operating it. So now you've got to begin to really rely on their operational excellence to ensure that you're generating an income from it. And it can generate passive income. Now, when you do that, and some people have, like, I purchased one, that's where it gets a little bit of a challenge, because when you own just that one and the AC goes out, boom, there's a $3,000 bill. That pretty much wipes out your return for the year on a $150,000 house. Or, you have an issue where the tenant moves out, because that does happen, and maybe the property's vacant for 60 days. You've just decreased your overall return, because that's the only economic return, because it's one unit. So there's good and bad to it. You just have to make sure that you're working with the right company. Well, next, let's talk about real estate syndication. So real estate syndication, an example of that is where a company like ours is going out and buying a larger asset. So for us, that's multifamily apartments, typically like 75 to 500 units. There's other companies that buy office buildings or industrial storage or self-storage. But a sample of that would be that we're buying this property for $20 million. We're then getting bank debt on that for typically around 70%, so $14 million. And there's $6 million of equity available. And then other investors join in with us and invest into that property. So now the benefit of that is you're getting access to a larger deal that has larger and better scale, potentially better returns. You've got expertise of management on the property, a company such as ours that's been experienced and in this market space for 20 years. You've got the ability to get a potentially better return through some of the tax benefits as well, because it's a larger scale and you get greater depreciation. So there's a number of things that really provide quality value and benefit with respect to syndications. And so even too, the larger scale that exists and the returns that can come can even generate the returns similar, if not better, to what you'd achieved on your very own. And so the syndication market is definitely one that's grown over the years, because again, more people have become aware of the fact that they can actually get returns just as good, if not better, than what they were getting on their own. Even too, one of our investors on our website and testimonial shares that, where he's experiencing similar, if not better, returns in the syndication investing with us. So it's absolutely something that you can do. And then the beauty of it is that it really is passive income, because then a company like ours is doing all the work in managing it, acquiring it, operating it, selling it, and you're getting the benefit of that passive income on a quarterly basis. I want to talk about passive investment criteria. First and foremost, does the investment vehicle make sense? I've seen people over the years that I've talked to look at different kind of fangled things, and it didn't really make sense. So number one, does the investment vehicle make sense? So for example, buying apartment buildings, absolutely makes sense. People need a place to live, and that's a necessity. It's always going to be here. Storage buildings, right? People store their extra crap, right? We all have extra stuff. So again, it's something that makes sense. Now the question becomes, is it located in a good geographic area, right? Like, you don't want to be buying something in the middle of nowhere, because not many people are going to use it. So again, that's a key component. Who is the operator that's going to be operating the property? That's huge. That's in fact probably one of the chief elements that you have to look at. And then what is the cash flow potential? Does it have strong cash flow potential? What's the management intensity and requirements? Are there any potential legal ramifications, meaning, jurisdictionally with the municipality? Is it something that is appropriately zoned? For example, when we buy an apartment complex, it is in the proper zoning and already authorized to be operated as a multifamily apartment complex. I've seen other things where people are trying to do some kind of, conversion or opportunity, and it may not be properly zoned. So those are things that you have to look out for. And I would go back to chief and foremost, you want to make sure not only is it a great opportunity, but it's also a great operator. Because right now, you want to be looking at passive income investment opportunities through people who are what I would call a full cycle investment operator, meaning that they've been through the good and the bad, because right now there's some challenging headwaters. And so it still means there's opportunity, but you got to make sure that you're looking at it the right way. Well, these are all the things that you need to look at and think about when you're considering passive investments. I have a free gift for you in the description on this video. I'm here to keep you informed so that you can make the best decision when it comes to investing your hard-earned money. And I'm giving you my free guide to investing in multifamily real estate, which gives you all the insights I've gathered over the last 20 years of investing. Click the link in the description to download it. That's all I have for today, folks. I hope you were able to learn a lot today, and I'll see you in the next video.